The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 18th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, well, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow off 8 points. Flat market, trading out at 24,780. The S&P's up 8 points, 2714. That's up 0.3%. The NASDAQ 100 up 0.4%. She's trading out at 6845. That's 29 points to the upside. Russell 2000, she's on a tear up 0.75%. That's 28 points, 6845. I'm sorry. Well, it's going to eventually get to 68.45. The Russell's actually trading out at 1591. It is 12 points to the upside. Sorry about that. Semis are off 8 points. Trannies are up 220. That's 2% to the upside. New York Stock Exchange up 52 buckaroonies with still very good market breadth. We're going to take a look at that today. NASDAQ Composite up 31. Wilshire up 114 points. Goldilocks up $5. She's trading at 1354. The big mover in the metals marketplace, I don't have to tell you, it is hi-ho silver. It's up about 45 cents. That's nearly 2 3/4%. She's trading at 1724. We're going to look at that for Larry, who wants to go ahead and take a long position inside the GDX. So we'll answer that question right off of the bat. But first, though, we got to talk about the movers and shakers. The movers, the upside dollar-wise, you've got Intuitive Surgical, ISRG, up 33 bucks and change. That's 777. Somebody is ringing the one-arm bandit. You've got Amazon up 25 bucks. That's 1.69%. Chipotle up nearly $10 or nearly 3% to the upside. IBM, that is the laggard, down 12 bucks with 13 million shares. 13 million shares in the case of IBM is pretty good volume, down nearly 8%. Lam Research nearly down 11 bucks. That's 5% to the downside. Azimil Holdings, ASML is the ticker symbol, off 570, nearly 3%. MKS Instruments, MKSI is the ticker symbol. She's down 5 bucks and change. That is 4% to the downside. But first, let's go to Larry. And Larry had sent in an email. I don't have it handy, so I'm going to paraphrase here. But basically, what Larry was asking, he said, hey, looks like gold and silver are breaking out. Is now the time to get into the GDX? With regard to silver, let's take a look at the silver contract here. And yes, Larry, you are correct. Silver is breaking out. There is no doubt about it. Nice wide-ranging bar. But what silver is going to do over the course of the next coming trading sessions is Stevie's red line, currently priced at 1664, and price will eventually catch up with each other. Doesn't mean that silver has to pull back. It could be a slight pullback. Wait for Stevie's red line to get out there. But silver's got some real resistance just about at the 1745 level. maybe a bit higher, 1770. But silver, and if you own silver equities, well, then that is a good thing because silver is breaking out. But your very specific question was really about the GDX out here. Silver's breaking out. Gold is not breaking out. At least Stevie doesn't believe that it's breaking out. If we take a look at the gold contract, here's the daily chart for the gold contract. Ain't no breakout in sight. In fact, in order for there to be a breakout, you would have to, or not you, but the gold contract, at a minimum, would need to get above, I'd have to say, its actual highs out here from January in 2018. That's going to be in about the 1375 level. So gold continues to trade sideways out here. So yes, is it bearish? Absolutely not. Is it bullish? Yeah, slightly bullish out here. But is it super bullish? No. It cannot get super bullish, not until it breaks out. And it does that breakdance in both dollars and euros. And the chart looks like this, Larry. If you take a look at gold and dollars, that's the top portion of our chart. A breakout for gold and dollars on a closing basis would be 1362.90. You're at 1354.50 out there. But a gold breakout, and I do mean breakout, will not occur with any kind of really good breakdancing dance steps. I've never done a breakdance, but I've seen them. In this case here, there's no good breakdancing dance steps in gold until it closes over 1107.70, priced in euros. So what do we have today? Really just sideways-ish type move out here. If we take a look at gold, silver, and the GDX, Larry, I put this chart up on our screen. And there are two Larrys, by the way, that had sent in a request for gold. So this is the second Larry. And I just was able to simply use the chart that I had started for Larry number 1. Something to think about. In this case here, if I take a look at the green arrow, that's March 1st out here. So you're looking at gold as the top panel. Down below that is the rate of change. That's the rate of change since March 1st. Then below that is the GDX. Below that is the rate of change for the GDX since March 1st. Then you've got silver, its rate of change since March 1st. If you take a look at what those rates of change are, and this first one was for Larry. Remember, we talked about the dust trade yesterday and how I was not a fan of the dust trade. So this first chart was really to help guide Larry or give him something to think about with regard to whether or not to be inside that dust trade. Now, he's got a stop in place, so I'm really not too worried about it because he's treating it just as a trade. But my point in the dust trade was you're on the wrong side. You heard me say that yesterday. And if I take a look at the rate of change since March 1st for gold, that's been 3.27% versus the GDX, that is 7.28%. When the GDX outperforms gold, that's a bullish event. You've still got to see the breakout in gold in order for this to really get any traction out there. And that was one of the thought processes, my thought process, my signal to say, you know, being short dust, being short the mining equities may not be the right trade out here. Now, let's take a look at Larry number 2, because that being said, you've got the GDX outperforming gold. Maybe you should go ahead and take a long trade, right? I say no. I still think you need to wait. Gold has got to break out in dollars and euros, and you need to pay for that information. Pay a higher price, perhaps. I still think the GDX pulls back, and then you might have an entry point. I just don't think it's now at $23.15. Steve Rhodes, when we get back, we'll go take a look at the markets or anything else that you want to, as long as you call them or send me an email or ping me in the den. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I need to answer Larry number 2's question a little bit further, particularly the GDX out here, Larry. What you're going to see is you're up with a decent volume, but that's it. It's just decent. It's 22 million shares, 22.8 as 1:18 in the afternoon. And what you're running into is a gap to the downside. Remember, gaps are your friends. They help to identify levels of support and resistance. In this case here, there was a gap to the downside, 75 million shares. That's between the price point of $23.39 and $23.45 out there. So it's running into a level of resistance with light volume. And as I suggest, this should pull back. The reason why I say it should pull back is just a couple of days ago, meaning April the 14th, we saw its price oscillate. The difference between two exponential moving averages, that'd be 19 and 39, we saw that price oscillator just squeak its head above the zero level. Typically, not all the time, typically, high percentage of the time, we're not talking 51%, we're talking like 85, 90% of the time, what we will see is when that occurs, you will see price and Stevie's red line, currently priced at $22.50, and the GDX eventually catch up to each other. Now, I think that is sooner than later. I don't believe that's going to start before tomorrow. Today is going to be day number 8 in the TD setup count out there. Tomorrow will be day number 9. Then that takes us to Thursday. So then Friday, Monday, Tuesday probably is when we start to see that pullback. And that's what you're really looking for, Larry. You're looking for a pullback into Stevie's red line. You're looking for that red line to act as a trampoline. Ideally, then you would see some other type of signal from gold and silver as well. Of course, that would be pulling back to a level of support simultaneously out there, and then that might give you your entry point. It could end up being at the same price that we're at now, but right now I'd say you want to go ahead and pay for additional information if you are not in on this trade. No reason to jump aboard as we speak right now today. So that's what I see going on, Larry, between GDX, between the dust, between gold, between silver. Now let's go to the general markets out here. If we take a look at what they're doing, you've got everything to the upside except for the semiconductors. If we start by taking a look at what's going on under the covers inside the New York Stock Exchange, well, you're going to see its advanced decline oscillator reading. Right now it's printed out at 170 and change. That means it's above 150. That means yesterday, as you were pointing out to me, that if you got to close above 150 in the advanced decline oscillator reading inside the New York Stock Exchange, that was uber bullish. I don't mean put Uber on your phone and call them, although you could, and then in the New York Stock Exchange, it would pick you up and you would go north to a different street. But before we continue with this, remember, we have call-ahead seating, and we've got Ron in Denver who's calling. So, Ron, thanks for calling. Thanks for holding. How are you today?
Good morning, Steve. Thanks for taking the call. I just want to let you know I sold some puts. I did an income spread. I sold on the DIA. I sold the 247.5 and bought the 246.5 and brought in 48 cents. And it expires Friday. So as long as it stays above 247.5 or goes higher, should expire worthless, and I make $48 times 5.
Sure. Okay.
What do you feel about that DIA? Does it look like it wants to go higher with the Dow?
Well, it does look like it wants to go higher. What the question is, so I'll give you a short-term chart out here. And one of the signals that we like to make sure that we're aware of is just take a look at the letter counts, or really the numerical count, and we look for wave number 7. That is identified by letter G on my screen out here. And the actual high that we have seen inside of the Dow Equity Futures contract, so I'm looking at that versus the Dow Diamonds, that took place out here at about, the time was 11:30 yesterday morning. Was that it? Give me a second here. I believe it was. It's the 30-minute chart. Yeah, so it looks like it was 11:30 yesterday morning. That price point, trying to get it for you. My apology here. That price point is going to be 24,827. So if you see price get above that, then I think you're good through Friday. Right now, we're just trading sideways. And this price oscillator here on a 30-minute chart, it is also nearing zero. It's very close to zero. And you can see that what price has done is continued to reject the red line out here. So what that really is telling me is, unless we see price get above that red line, I would anticipate that the Dow will even pull back a bit further out here. You're up against some decent support, but it's telling me that this would has the real potential to pull back further because it hasn't been able to make its way up there and take out that high. Now, I do recognize that I believe IBM is, even though it's, I don't know what weighting it is inside the Dow. Maybe you know what it is, but I know it's like about 80 points or so to the downside. That's where the real pressure is coming. So that's one thing to consider. The 4-hour chart inside of the Dow Equity Futures contract, it's only in wave number, let's say, 6 of 7, but it continues to trade below my red line out there, so I don't necessarily like that as of 1:24 in the afternoon. And the real support inside of the Dow Equity Futures contract, I'll give it for you in the diamond, is going to be 24,270. Now, that's 500 points to the downside. And that might seem like a lot, but the reality is inside the Dow Diamonds, the actual average trading range over the last 10 days is 411 points. So that's just normal, potential normal price movement, even though we've seen kind of a stalling of those large ranging days out here. Inside the diamonds, that level of support is 240, 223. And if you saw a pullback to there, that would not work well for your trade. Is that correct?
You're right. Right. No, I could be wrong. So I'll be very, very, with any kind of weakness, I think I'll just get out of it and not risk it.
Yeah, I mean, everything else. So if it wasn't for IBM today, I'm going to say, then our outlook would be pretty bullish, because that's the message of the New York Stock Exchange and all the other indices, which was, in essence, where I was going before I went ahead and took your call. But your call has priority. If I take a look at IBM specifically right now, so let's do that. Let's see what IBM is doing. So you've got pretty big volume coming out of this equity from a daily perspective. And what I mean by that is 14 million shares so far, and that's really going into the swing point of February 9th that only had 7.8 million shares. It doesn't have to get down to the bottom, which is 144.40, but it doesn't look to me, and it looks to me more likely it will than it won't. So you're not going to get any help here from IBM. Now, it doesn't have to get to that bottom tomorrow, or today even. But because it's pushing lower with volume, it says more likely than not until you see it close above 150.54. You have to assume that is going to do it. Now, I don't know the weighting of IBM inside of the Dow. I don't think it's in the top. I know it's not in the top 5, but it's still putting some hurt, inside of the movement of the Dow out there. So does that help? I mean, I hate to be. I do not like to waffle.
It helps a lot. I don't know how long it'll take IBM to bounce back, and so I'll be real cautious here. If any kind of weakness, I'll get out.
Yeah. So in summary, here's what I would say. In summary, we've got a signal of a short-term pullback inside of the Dow Equity Futures contract. To me, that signal would be confirmed if you were to see a price close or price move below 24,673. So that's the number to watch to the downside. All right, Larry? I mean, I apologize. Good enough?
I'll watch that.
Okay, Ron. Thank you. Thanks for calling. That was Ron in Denver. This is Steve Rhodes at TFNN.com. We'll be right back after this quick break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And Ron, I know that you're still listening, and I hope you are. What I did was I put the equity futures contracts, the 5 different time frames that we're looking at, 60, 120, 240 daily and weekly. The set of profiles up on my screen for you. And I had given you number 24,673, which was the low that we've seen thus far. And I still like that number. And I like that even more so, and take a look at the 2-hour and the 4-hour current profiles, which both have a bullish structure. And the bottoms there are 24,700 and 24,678. So I really like that 24,673. If you were to see a move below that, that would suggest that we're going to see some lower price. Not like the top is in, but with regard to your specific trade out here, you know, doesn't tell us when that bottom would form either, and it would be just a normal natural retracement out here. Right now, this says sit on the trade. It says sit on it, don't sell it. If you were to see price close below those levels, then we've got new information. Now, these profiles can change at any time. So this is information as of 1:30. But I don't see any type of orange candle out here, which would be an indication that a new profile is about to form. So I would just sit tight, and I would go ahead and use those numbers. Let's go out to California and speak with Garo. Garo, thanks for calling. Thanks for holding. How are you today?
I'm very good. How about you, sir?
Very good. Thanks so much for asking. And what would we be taking a look at today? While I try to find your, I have a special Garo page in my system, so I just have to pull that up. Last time you called, we were looking at MasterCard, and I see you got your 521 cross out here. Was that yesterday,
yes,
or is that today?
Yes. Yeah, that is a separate investment. That I have that MasterCard. I'm going to keep it for a while.
Okay.
I have a long question today, sir. Allow me to talk for 2-3 minutes.
Please.
And then from there, I be quiet, and then I wait for your answer. Is that okay?
Yeah, let me get out my notepad now. If it's a long question, you know, my memory's only.
It's not, it's not that long, sir. No, but,
okay.
Yeah. Here I have something with CMG that you bought today.
Yep.
If you bring your 3 years chart, daily chart, 3 years.
Yeah.
Yeah, you will see that in July the 16th, 2015, the 5-day simple moving average crossed the 200 days, the simple and the exponential.
Okay. Okay.
And yeah, it went flat. It didn't do very much. At the beginning, it did a little bit, and then after that, it went flat. And then in October 23rd of 2015, it slided. That 5-day came down from the 200, but from
sure.
the exponential and simple. But if you see that the 200 days, they go very close to each other. They didn't split from each other. So it shows that it shows that it didn't do that much of work there at that time.
Okay. Okay.
Same thing happened in March of 29, 2017.
Okay.
The 5-day crossed the 200 days. First the simple, the second the exponential, and it went up and it came down later on in July. Now, here in July, August, we see that 200-day exponential crossed the simple 200-day, and it's going. Yeah, it went down until in these few days. In these few days, the 200-day exponential crossed the 200 simple, and it hit the second dot from the bottom, and it's above the 200 days, the candle. Now, my question is here that you think this is going to go up to $400 from here, or you think that it's already done its work? It's already done, and from here maybe it will go up for another $10, $12, and from there it will slide down. This one, or if you check Square, SQ, that's in excellent shape. Today it gave the second dot from the bottom, and that is gonna, I'm sure that is 90% is gonna go up from here, that Square. Now, which two charts do you prefer? Which one you think is stronger? That is my question.
I'm going to first answer your question with regard to Chipotle, and that is this. And so your question in Chipotle was, can this continue to move higher into the $400 area?
Yes.
And so I want to be able to answer that question. There's one tool that I don't have on your set of charts that I'm going to go ahead and add. I know I don't have it on there because you don't use it that often, which is volume. But today, specifically for me, it's important to take a look at the volume in order to answer your question. And so the volume so far today is 1.1 million shares. And I'm looking at a couple of different levels. First, if price can close over 345.88, that happens to be the high from January 19th, then I say chances are that it will continue to run higher. We'll go figure out if it's the 400 level. The volume on that session was 1.1 million shares. You're already at 1.1 million shares today, so it's going to have more volume than that swing point. Price has rejected that level, meaning right now it's gotten over, it's trading below it, but I don't know how this is going to end this session today. What this does tell me is that at least tomorrow it's going to go test it again, even if it closes below that level. The second candle that I would be focused on is March 22nd, and that had 1.5 million shares. So it seems like to me that Chipotle has the volume on that candle session as well. That high was 344.34 out there. I'm still going to stick with the 345.88 level. But if that area gets crossed, and if it gets crossed today, not crossed, but closes above that level today, then what the signal is Chipotle will head up to either 404.52 or 430.86. That would be the level. Now, you've got your parabolic SAR that says, okay, just a parabolic SAR says look for trades. You've got the 5-day crossing over the 21. So, you know, things seem to be set up. For me, the certainty would be a close above 345.88. That's what I see inside Chipotle. Is that cool?
Yes, but the 5-day hasn't crossed the 200 exponential yet.
Okay.
It may curve, yes, tomorrow or day after tomorrow. That 5-day, if it curves from that, it won't cross that 200-day, then everything will fail. From there, it's a short. It's a big short all the way down to $260.
Okay. Well, and I will say that if it closes above 345.88 today, then I think this is going to 404.52, maybe 430. As I take a look at it right now, and that would be a confirmed A to B equals CD. You'd be up above a resistance area. You'd be doing it with volume. You'd be above market profiles, daily and weekly. So the tools that I would use would say, hey, this thing wants to head higher. With regard to Square, SQ is the ticker symbol. If I just do a quick evaluation of Square, remind me, your question was about Square, whether this thing would go back to its highs, or so give me your question on Square again.
On Square, regarding that, you see the 5-day crossed the 50-day. It has not crossed the 21 days.
I see that.
I'm waiting for that 5-day to cross the 21. Whatever the price is at that time, I will get in. You see?
Perfect. Hey, we're going to go to a break, Carol.
I asked Mr. Tom O'Brien regarding
we're going to go to a hard break. We'll be right back.
That this is going to go down around $34.
Well, stick through the break, if you will, and I'll finish take a look at Square for you.
Yes,
we'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So my voice may sound a bit different. That's because we had a power spike here at the house during that break. I lost my system. I lost internet connection, but we will prevail. So I know I've got Garo on the line with California, and we are specifically taking a look at Square. Ticker symbol is SQ. So I don't have a chart to show you, but Garo, I wanted to be able to answer your question. And what I like about today's trading action is two things. Number one, it's above the high from April 14th. And as long as it stays above that high, then Square wants to head higher. What I also like about that I can't show you is that as price was moving down into the trading day of April the 7th, that over the course of the next several days here, where it was moving sideways slightly higher, what it was doing was it was pushing its price oscillator, often referred to that, down towards the zero line. And yesterday was a test of my red line. Today, price is above that level, 49.49. So for me, the call is very simple. If price stays above Stevie's red line, 49.49, price wants higher. And in the case of Square, probably wants to get all the way back up to its previous highs from March 22nd out there. So I would show you more, but I can't show you anything because I'm without internet. So, Darryl, does that help you out?
This is going to pass that $58 from here?
I don't know if it'll pass it. What this tells me at this stage here is what Square did was Square came right down to support. And if we were taking a look at my screen right now, support would be the low of the trading session from March 6th.
Okay.
It came down and it tested that level and it held that level. And then today, the move above 49.49 specifically was a rejection of those lows. And this says that Square now can go ahead and run back to its highs. If, to answer your question, is it going to take that out? I would need to see what price is doing, what volume is doing as the March 22nd session is being tested. But as we speak right now, before I was cut off,
not by you, but by the power company here. This says to me this wants to go higher, not lower. And I think that the target for me is always the previous swing point. So that's March 26th.
Yes, I'll call you tomorrow regarding this square, and then we'll talk more about it. I do thank you very much for your time, sir. I appreciate it. Thank you.
My pleasure. That was Garo in California. And so, folks, I'll do the best I can with the next 5 minutes here. My system powers back up, then I'll get back online. At this page here, what I'm going to share with you, in essence, is what it is that I'm looking at when it comes to the overall market. And I had touched on inside the New York Stock Exchange. So we were talking about, or I believe I was speaking about, the New York Stock Exchange earlier, and that is on higher price. And what I was referring to there was the reading of the advanced decline oscillator. That's the difference. That's the calculated difference between the advanced decline information using the oscillator, which is the difference between two exponential moving averages, those being 19 and 39. Now, the reading, when we took a look at that, was above 160. Where I really start to focus on it is when we see a close above 150. And we did see a close above 150 just slightly yesterday. If you were to go back and put on your chart the New York Stock Exchange and do this since the lows of 2009, since March of 2009, and you were to take a look at the number of times where once the advanced decline oscillator reading got above 150, and what it meant, the majority of the time tells us that we are going to higher prices over time. Does not mean tomorrow necessarily. So make sure that you interpret what it is that I'm saying in the way that it is intended, which is that we should see higher price inside the New York Stock Exchange over the coming weeks out here. Doesn't tell us to when or anything along those lines. But it is this is the first time that we have seen, this is how strong the market breadth is. This is the first time in 2018. Yeah, that's even with the run in January 2018. This is the first time we've seen a reading inside the New York Stock Exchange above the plus 150 level. Now, I don't know where it's going to end today. And if today it were to go back below 150, well, then I would have a different piece of information to share with you. I can only go with what I have or what I had prior to being knocked off of the air. So this is something, remind me tomorrow. We'll come back to it. We'll take a look. Did it extend those gains, that advanced decline information, or was it rejected at the 150 level? And that's going to be important. So what I can also share with you, before I was knocked off the air, the advanced decline line was at a new all-time high. Price is not at a new all-time high. We're not anywhere near the highs from January the 26th, which I believe we're in the 13.6, 13.7 area. So, cut me a little slack there. I don't remember the exact number off the top of my head. But what I do know is that we are at a new all-time high with regard to the advanced decline line. Folks, there is only one way. Well, you can interpret how many different ways you want. There's only one way Stevie is going to interpret it, which is that market breadth is super strong. So for those folks that are out there taking a look at the bottom that was formed recently here inside the markets, the Dow gave us a signal in early April. So that was a couple of weeks ago, gave us a perfect bottoming signal. Now what we're seeing is just absolutely strong market breadth inside the New York Stock Exchange. No, we can't trade it, but it can provide us with great information. Just like it closed below the 150 level today, would also provide us with great information. So I don't even know where it is we're trading at 1:48 in the afternoon, but this is going to be an end-of-day reading. So it doesn't matter where we're trading right now. It matters where it is that we close the session. So tomorrow, that'll be important for you and I to come back and take a look at. But that is a bullish event, or a potential bullish event inside of the marketplace. So now that I've got that out of the way, and I have another minute and 30 seconds until the breakout here, where should I go next? That's what is it? What's the one thing that you should be looking for out here? Let me give you the bearish side, because I don't want you to just think I only look at one side of the trade, because that's not the case. I posted this inside of the Tiger's Den. If the market is going to top, okay, there's always that potential. So let's take a look at both sides of the trade. If the market is going to top, the earliest that I could provide you with a confirmed topping signal, that's right, you heard it here, the earliest would be 2 o'clock tomorrow. as we're going off the air. Now, a lot depends on what happens between now, which I think is 1:50, and 2 o'clock. And I don't have live data, so I can't answer that question to know exactly where we are. But depending upon where this close is at 1:50, the earliest would be 2. Then the second earliest would be not until after the market closes. That would be the earliest that I could come up with a topping signal inside of these markets. So that's my view. I'll figure out what to share with you during the last 2 minutes out here. I'm going to go put another quarter inside that modem of mine. I use that little modem, you hook the phone up, you put it in there, it goes, dude. No, I'm just kidding. So I'll go see if I can put another quarter in, see if that changes things, see if we can get back online. But if not, I'll have something to share with you, even if I have to pull it out of thin air. This is Steve Rhodes with TFNN. Thanks for sticking around. I'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks, or I guess maybe you should be saying that to me. All right, welcome back, Steve-O. So we got everything up. I had just enough quarters in order to get the machine fired back up. Now, what I'm looking for here, what I wanted to share with you, is the weekly market breadth for the TAS market profiles for the S&P 500. I'm trying to get that thing fired up here. Let me share. Oh, here, we got it. Okay, how about this? Yeah, I'll tell you what, there's a reason they call me Stevie Perseverance Rhodes. Of course, I know that's what they call you as well. If we take a look at the S&P 500, it also is trying to persevere. And what it's done so far is 154. Now, look, this is a weekly market breadth, so I don't know whether the indication here is going to stick or not. But we have to trade what we see. Right now, what we see is a bullish crossover, meaning there are 139 constituents inside the S&P 500 where prices trade above the top of the box versus 122 below. Now, typically, with the exception of being in a consolidation market, that's right, a consolidation market, typically when you see a crossover here, they hold for quite a while. So the question is this one going to hold? You kind of couple that with what we were taking a look at inside the advanced decline oscillator for the New York Stock Exchange. Again, we'll come back, circle around, take a look at its reading tomorrow. That's when it really has a meaning for you and I out here. But if we take a look at this, there's plenty of market breadth here. Now, I know you will hear people on the boob tube tell you that's not the case. Don't believe them, because I don't know what in a Sam heck they're actually looking at out here. You know, market breadth, there are a number. Look, when you build a table, I promise you the tables that you eat off of have got 3 or 4 legs out here. No one thing is going to be able to hold up any table. So you need market breadth, you need price, you need volume, you need a number of different tools and indicators in order to be able to give you that confirming message when you take the final vote out here. Well, right now, the vote for market breadth inside the S&P 500 is bullish. So, folks, thanks for putting up with some of the nonsense that I had to deal with here. But you and I, we persevered. And that is what it's all about. Stay tuned. Your favorite polar bear, David White's up next after that. Because it's Wonderful Wednesday, Tom O'Brien from 3 to 5. Thanks for being here. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.